It's Fed week. I don't know if you heard about this.
It's
the last one of the year.
Yeah, but it's kind of a foregone conclusion, Fed week.
Yes and no. Because what's interesting
So does
to
the
me,
move come off the inevitable 98% price to cut?
I think it's even like 99.5%.
Or
They really priced it in.
and that comes out at 1 o'clock on Wednesday, Chicago time. 1:30 is Chief Chucklehead's press conference. Is it
Yes.
the press conference that drives the market?
I think
We get a double dip binary event, which is good.
Well, I think a couple of things. So yeah, they've pretty much fully priced in this 4.5%. Right now we're at 4.75, so a 25 basis point cut. And if we can bring up the economic calendar, you'll see that we were flat for a number of meetings, more meetings than people expected here in 2024. We had the 150 basis point cut. That was amid a lot of U.S. dollar weakness. And we had a 25 basis point cut. Was that the last meeting?
Yeah.
And so I think this would be either 3 out of 4 meetings or 3 meetings in a row. I can't remember if they stood pat for one meeting in here. Either way, the trajectory is lower, but they're only looking at 25 basis points. And the big thing to me, Pete, if we bring up the FedWatch tool, which I will do right now, from the CME group, which looks at, you can see here, they're counting it down. We got 1 day and a few hours.
Yeah, and if you've
tomorrow
never looked
afternoon.
at this before, what this is assigning probabilities to rate cuts in the future. And is it a bunch of macroeconomists in a room guessing? No, because that's useless. That's a little harsh, but it's less productive.
It's useless. I'll say it.
Yeah.
It's useless.
What this is taking Fed funds futures prices and implying a probability around them basis the pricing. So this is people who have skin in the game, which is really interesting and reinforcing. I mean, you look at election markets, predicted markets going into the election, and there was no doubt who was going to win this according to those markets. Now, there was arguments that people were skewing them because they had a political agenda or whatever. Those never waver.
Why they would spend millions and millions of dollars to...
It depends on if you got billions, maybe it's worth. But
Yeah, I don't know.
think more than not, that became a very interesting, more accurate precursor of what actually
sure.
transpired.
Yeah.
That all the chucklehead polls in the world.
Which isn't to say that, and I would even say contend options, right? Like options is the same exact thing.
Yeah.
You go into an Amazon earnings,
Right.
and you're like, of course you could ask your buddy at cocktail hour the day before, hey, what do you think is going to go on with Amazon? And it's going to be up 10%. It's going to be this, that.
Is that another thing they have at this bespoke penthouse building? Is cocktail hour?
No.
Okay.
I don't have.
Usually, my wife and I sit outside guarding for vigilantes with a 6-pack.
Listen, you know me. I don't talk to anyone or go to any
we have
cocktail
a much
hour.
harder life than you do down in the penthouse.
But you know what I mean. The options market will pretty efficiently tell you what hundreds, if not thousands, and if millions, if not billions of dollars are thinking is going to happen at a given event, and you get the implied volatility out of that, and it lets okay, well, Amazon is likely to move plus or minus 5%. Maybe there's a little skew this direction or that direction, given all of the information in this market. It's the same thing here, where you have probably even more traders. I mean, interest rate markets are some of the highest volume markets on the planet.
Yeah, look at it. This contract's doing 40. These markets are doing 42,000 contracts a day, almost 350,000 of open interest. Now, when we were at zero rates, these contracts had trade.
Yeah.
They went literally down to zero.
Well, and these are the Fed funds futures are relatively very illiquid, not illiquid because the bid offer is very tight. They get a lot less volume than treasuries.
And, well, because it's an interesting it's a very big contract. It's got a weird tick value and stuff, but it is a useful tool because it's accurate. It's like predictive markets at the election. This is people who have a financial stake in it.
You see a 97% chance for tomorrow.
But I digress, because I think where you're trying to go is it's really, that's the certainty. What's uncertain is the pace rate. And that is probably the greatest. The fact they hiked 25 basis points, does that make the dollar rally? Not necessarily at all. That's certainty for the most part. It's the trajectory of. We always talk about this. It's both between two currency pairs. It's the difference in rates at the time, but also the trajectory or
the future movement.
Right.
Yeah.
The direction of travel for rates in the future.
And that's been, I would contend, probably the bulk of the U.S. dollar strength over the course of the last couple of months here, because you look at, okay, well, they're expected to cut. And if I know anything about Forex and interest rates, well, lower interest rates would mean less U.S. dollar demand because there's lower rates compared to maybe if the Bank of England wasn't cutting or if the ECB wasn't cutting or if the Bank of Canada wasn't cutting. But all of them are cutting. And in the next year, they're pricing in a lot more cuts than the U.S. because tomorrow's meeting, Pete, so we're at 4.5%. Right now, they always
there's always a
ranges.
range because they don't lock one rate, and this is the overnight Fed funds rate where banks can come and borrow money from. So it floats, but it floats within a band.
And so let's say we're at 4.5 right now. Tomorrow, there's a 97% likelihood, which actually is low. Yesterday I checked and it was 99%. I don't think anything nefarious is going on, but yeah. Tomorrow, they are expected to cut down to 4.25.
Right.
Okay. This is December of next year, so this is a full year. This is all the meetings for 2025, and the market is pricing in a pretty even market between one more 25 basis point cut or two, and an outside chance of 3 or 4. The Bank of Canada just cut 50 basis points after cutting, I believe it was 100 basis points. And most other major central banks are pricing in much closer to the 2 to 3% range than the U.S., which is, it's a coin flip between whether or not they actually get down to or below 4% all of next year. And hence all of this, and I brought up Canada, all of this U.S. dollar strength. And look at, this is the 15-minute chart, and U.S. dollar is going to rally again this morning. And look at this. This is the daily chart. Holy smokes, all of the U.S. dollar strength that we're seeing looks like we might hit here 143 in dollar CAD. And just because we're here, I mean, these are prices that are very rarefied air for the last 20 years of trading. This is 20 years of data that we have here, and we haven't spent a month. This is the monthly chart, have not spent a month above the prices that we're currently trading above here. Does that mean that they have to come down? No. I mean, anything's possible in this market. But this is unbelievable U.S. dollar strength on a week where they are going to cut rates here. But all the nuance is they're not expecting to cut so much next year. And places like Canada or Australia or the Euro area are expecting a lot of cuts, and they're seeing a lot more economic turbulence.
Absolutely. And again, at its peak of rate hike fervor, they had 6, if not 7, I think 6 cuts priced in 2025. We're now down to a cut and a half. That is, okay, that's the direction of travel. Where is the terminal rate of this exercise? A lot higher than where they thought it would be 3 months ago. So does that give the dollar some legs, especially when you see Canada be more aggressive? Absolutely. So Euro actually tried to stage a rally above 105, and this is still...
Well, you look across the board here, and yesterday was a classic, just when you thought it was safe, not so much.
No, we're up to 105, 25, 30. I was like, maybe it's quiet enough that they're going to put some risk on the other side. And they tried it higher last night. They tried. Right at the... Tokyo comes in, China comes in at 8 o'clock, Chicago time in the evening. Right at 8 o'clock, they were up to 25, 30 bid in euro, and that was the best we could do.
Yeah, they tried to.
We got over 30 briefly.
Tried to rally this thing up. Yesterday looked like, okay, this might be, and it's funny because I at the end of the day, nobody knows what the hell's going to happen tomorrow with the Fed event, but it does seem like whenever everybody's piled on one side of a trade, and it's like
it can get tired.
This unprecedented U.S. dollar strength. I just showed you the chart with dollar CAD. We're at extremes for U.S. dollar strength that we haven't seen in some cases to the tune of, decades here.
Right.
A lot of times the unexpected thing can happen. I don't know, maybe if it's like some kind of recency bias kind of thing, but like what really sticks out to me is the Fed events where everybody's expecting something, right, and then something else happens. And I have to say that this is a really coiled up spring here, yep, where it's like, man,
wrapped around 105, yeah, which is cheap, but we're again 140, 150 pips off the lows, which were 103.60, 103.50. So, well,
and I have to keep bringing back the last ends of the last 2 years, yeah, which was both they were flip side scenarios. Dollar strength 1 year, dollar weakness, right, 1 year, going into the end of the year, but they both turned, Pete, on a dime. Yeah. And last year, I just have to bring this up. Remember all of the U.S. dollar weakness, right, going all the way into the same week that we're, yeah, in right here. They're going to cut 6 times, 7 times in right, 2024. And then on a dime here, this last week of 2023, it all comes out. You see the U.S. dollar strength throughout the first 3 or 4 months of this year, and everything turned over. I'm not saying that that's going to happen. Right. The same thing here this year. There's no seasonality to the U.S. dollar. No. But man, at some point this thing will turn around. But it's not 143. No. It looks like
we got the Fed meeting Wednesday. We got the, yep, Bank of England meeting Thursday. No cuts expected.
We got Japan on Thursday or Wednesday night.
Wednesday night, Thursday morning early. Yeah. Right. Bank of Japan. Again, no hike expected, yeah, but maybe a little bit of a wild card. We'll see how that plays out. So lots of good stuff to, again, if you have an opinion at these levels, either, dollar continues to rip or dollar's gone too far too fast.
Well, and we have Canadian inflation in 30 minutes, and right, we have U.S. retail sales in 30
right,
minutes.
This is an action-packed week. So lots to do, and we'll be covering it for you throughout the week. So highlighting the opportunity. Tomorrow we'll take a look at some of the safe haven pairs. Swiss yen, well, we'll see how safe yen is at, yeah, 155, but it's certainly not reacting like that anymore. So again, interest rate driven. We'll see you back here tomorrow. Have a great day.